Hello, everybody. Justin Stivers. Thank you guys for tuning in for another episode of the Stivers Show. This is a good one. Good friend, Ariel Diaz with Trajan Commercial Realty. Ariel, we're going to try to keep it tame. I feel like this would be like better served and probably be more enjoyable for people if we were having drinks because it, it would, it would be,
Guys,
it would be fun, man. But thanks for being on the show, brother.
absolutely, man. It's a pleasure.
Well, so we got a lot to get to. I want to dive in, man. But where I always like to start is, who are you and what do you do?
Absolutely. So the name of my company is Trajan Commercial Real Estate. It's a family-owned commercial real estate brokerage and consulting firm, and it's operated by myself and my lovely wife, Claudia Splinter, who graduated from Barry University. And I myself have been doing this since 2001. And so I've seen the ups and downs of real estate. And I really started more in residential, and then I went into property management, and then I really fell in love with commercial real estate. And little by little, I just dedicated a lot of time to analyzing properties, seeing how they differentiate from each other, and really fell in love with commercial real estate and analysts. So that's what tended to, or got us to start doing commercial real estate. Of course, my wife, like I said, graduated from Barry University, and then we eventually got our CCIM designation, and we've been doing commercial real estate ever since.
So when you say commercial real estate, do you mean like multifamily units, apartment complex? What do you kind of mean by that?
Yeah, well, good question. Well, when I say commercial real estate, it is anything 5 units or above for multifamily. And then what we specialize in is industrial properties and commercial developments. So we do all those three. There's different asset classes. So like commercial real estate can also be hotels. The commercial real estate can also be office space. But what we like the most is multifamily. And that's because we like to renovate them and then either refinance them or sell them. So we assist people to do that as well. Or we like the industrial space, especially here in South Florida, which the industrial asset class has really taken off.
What's the kind of split for you guys, like between like industrial versus the multifamily?
Yeah, well, I guess it just depends on the year. Right now, it's about 80% industrial and 20% multifamily. But like last year was quite the opposite.
Hmm.
The last 2 years, it was mainly multifamily.
Do you think I'm just thinking of the side, like I know Amazon's moving to Homestead, right? Is that where they're going or?
Yeah, well, they have a place already in Opalaka,
Okay.
and they're in the Homestead. Yes.
Is that good, bad for you? Doesn't matter or?
Well, it's good, really, because it just means less space. So when there's less supply available, prices go up. And as a broker, that's always good because we work off of commissions. So the higher the price, the higher the commission is going to be. Uh, but in reference as an investor, sometimes that will hurt us because of the exact opposite, because you're looking for to get the best deal possible. And obviously that includes the lowest price possible.
I'm wondering for multifamily, because Homestead is like one of those areas where you can get a decent sized, like I was like looking at multifamily units, and like this one I was looking at in the Gables, it's like a 32 unit, like 8 million, right? Like just stupid. But so like it wasn't even, I think it was 20 unit actually. But like Homestead, I feel like you could find a 32 unit for like probably 125 a unit or something, like for like 3 million, 3 to 4 million, something like that. But like not a whole lot of like um, jobs in Homestead other than like agriculture. But I'm wondering now, like, maybe this is like a good opportunity to invest in something. I hope that's like not a secret that I'm giving away. I don't know.
No, it's actually something that a lot of people have been talking about. The problem with Homestead is that it's never really taken off. It's this great hope, right, that we've always had for Homestead. It's just never really taken off. But maybe with everything that's going on in today's world and just the simple fact that there's not enough land in Miami, people are looking more and more into Homestead. And then now with this huge investment that Amazon is going to be bringing there, where they will be creating a lot of jobs, it's going to be, I feel, and the reality, it's not a big secret, because if you drive towards Homestead, once you pass Eureka, you start seeing new developments going on in there. So people are starting to catch on and see what's happening there. And in reference to price, as an investor, you're not really looking at price, except for the fact that, what can you afford if you have, when you create your budget, and how much you're looking to be able to invest. But there's ways to resolve that as well that I could talk to you about later on. But what you're looking for is, what's your return? So what is going to be the net return at the end of the day? And you either look at the internal rate of return or the cash on cash return. And then you compare that to your other options, whether it be the stock market or another real estate investment.
Yeah, because if you're paying $8 million for a 32 inch in Coral Gables, you're getting a 6% return, and you're paying $3 million in Homestead and getting a 3% return. I'd rather get the Coral. Yeah, so it doesn't really. Yes, you're right. It doesn't really matter on the price, but if you're looking at what you can afford, well, so what are some of your options on the, because you probably have, I guess, what's your range of investors? Like the investors that you're working with, are they coming to you with, X amount of dollars usually, and they need to crowdsource or find other investors? Are you putting those deals together?
Right, so we have a whole wide range of investors. We have the business owner that's looking to invest in their own business and buy, whether it be an industrial property, or some other type of commercial asset for their own business. And then we have also investors that come to us with a specific return in mind that they have, and they're looking to invest in commercial real estate. And then we have obviously the foreign investors that are coming here that are, some are looking for returns and some are just simply looking to get into a more stable market. So as crazy as you might think that it is here in the United States and Miami-Dade, there's other markets out there in the world that are a lot less stable than here. So that's pretty much the range. And now what we're seeing, for some time now, what we've been seeing as well is not only international investors, but also people from different states that are really looking at Florida and Miami-Dade County a lot more now than before. So as we start seeing the returns dropping here, like when I mean that is like the cap rate, right? Which is basically just the return that you're receiving for that first year. So we see that number lowering, which is bad for the local investors. But again, there's other countries and other states that they have it a lot less than us. So it's actually very interesting and compelling for those type of people to come over here and invest in Miami-Dade County.
And are they managing the deals themselves, or are you, like, is someone coming to you with, say, hey, I've got $500,000 or $1 million I want to invest? Are you trying to partner them up with other people, or how do you work?
Right, so that's what I meant by actually solving that issue. So if you only have a specific amount of money and maybe it can't get you that down payment, or you don't have enough reserves to get into a commercial real estate asset, then what we do is we can form a partnership, and where that individual can come to us, they invest in a specific amount. They would be called what's called a passive investor. So they would have no management skills necessary to operate the building, and we would basically manage everything for that particular investor.
Oh, so these are assets that you personally are managing.
Right. Yeah. So we manage so there's certain properties that we manage. We've gotten less and less properties that we managing now. We actually sold them, a lot of them. And now we're only managing the ones that we manage for ourselves, for our specific investors.
Gotcha. And so obviously I got to ask, with COVID and everything, has that affected you all? Seen anything, or just business as usual?
Well, like we were talking about before in the call, um, everything that's COVID-19 related, we feel is just like the tipping point. We have been projecting some type of crisis, some type of economic scenario that was going to come in. So we were speaking with our investors and also ourselves internally. We were preparing for something to happen in the near future. That being said, COVID-19 is it being a health issue and all the lockdowns that are going on and people not being able to get to work is something that we could have never planned for, or that we at least didn't expect. But having the reserves necessary, we were able to communicate not only to our investors but also to our tenants, and really be able to take this as smoothly as possible, and negotiate different terms for different type of for different people, for different tenants, to try to assist them to really get through these difficult times. So we were prepared for some type of outcome. We obviously didn't think that this was going to be it, but that being the case, we were actually just recently able to refinance one of our properties, and we wouldn't have been able to do that if we weren't leveraged correctly.
That's great. I know you guys used to, maybe you still do, work a lot in the little Havana area. Is that still something you guys work on a lot, or too saturated now?
Yeah, it's very saturated. So we have two buildings in Little Havana, and we were working that market a lot.
How many units?
To multifamily. In there, in total, the ones that we operate is about 32.
Okay.
And in in that particular market, where you would think that things could have been affected with the current situation, was very stable actually. A lot of the tenants were had construction, were working in construction. A lot of the tenants were nurses, and so they really weren't affected. And the reason for that, because the strategies for these type of buildings is that we renovate them, and they're usually renovated above par to the rest of the market. So we're able to get higher rents, while at the same time not being the highest one on the block. And that strategy worked out very well, because we also were able to create interest from a specific type of tenant that it just coincidentally weren't that affected by this whole scenario. Now, again, there was a couple of people that we had to assist and create some form of rent relief, but the overall picture, we were very well prepared for. And basically, when you look at an investment like this, you are always going to look at a pro forma. And in that pro forma, there's going to be some type of reserves and vacancies, right? Some percentage, some
Like 10% vacancy or something.
Exactly. So we were ready and prepared to go down to a 20% vacancy.
Oh, wow.
That's how well funded we were. So when this whole went down, we were not panicked. We were able to just communicate with the tenants and explain to them the process. Look, if you can't necessarily make your payment today, set up payment plans. We were able to negotiate some of them to maybe not pay this month, but pay the next month, and then little by little pay up catch up on payments. And it overall, it worked very well. And then we even gave an incentive. If you pay on time or in advance, we're going to give you a $50 Publix gift certificate, and that worked very well. And now they were all very, very grateful, and they're paying on time, and we're doing well.
So this specific property, so it's 32 units. Is this one that you own personally, or you're managing for a team of investors?
It's owned and operated by us, but we have investors in it.
You found it and you raised capital like through investors.
Correct.
Gotcha.
Yeah.
Gotcha. So why go the route with renovating it and not, or do you look for, is that like part of your strategy, is you want to bring it up, like you said, kind of just a little bit above the lowest end, but not quite the highest end? And is it easier to find something like that than it is to find in something more or less turnkey?
You can find turnkey properties, but the returns are not there, the returns that we were looking for. That being said, there are a lot of turnkey properties in that area now because there's newly built properties and or recently built, at least in the last 10 years. And if they're managed well, you could definitely get good turnkey deals. Now, usually people that are buying those are, other type of hedge funds or people buying for generational wealth. So they have a lot of money, they have, a family, and they want to, pass on that wealth sometime in the future. So that's what we see. And that's a very, those properties actually sell relatively quickly. And so you're going to be going up and competing against some huge monsters.
Yeah.
So we kind of decided that the best strategy for us and our investors was to buy something maybe like a Class C building and bring it up and renovate it up to a Class B building.
So this seems like kind of a good, almost like a good intro level into real estate investing, right? Like, so because this is like exactly kind of like what's on my radar for something is, find a 32 unit, get some investors, if you don't have enough for the down payment or whatnot, you manage it, you operate it, and you just pay them the return. I'm curious, so are these investors just wanting X amount of return, or do they, you don't have to use this, you can use a fake example if you want, but like, or do they want a piece of it? Like when you refinance, do you buy them out? Do you sell it and they get a percentage of that? How do you generally structure it with someone like that?
Yeah. So the way that we structured it is that we give them a piece of the overall pie. So they get an equity share. You can kind of just think about buying like a stock. So basically what you're doing is you're buying into an LLC. Okay. And by buying into this LLC, you're going to gain rewards for that. So as that LLC increase in value, in this case appreciates, right? In real estate, it's called appreciation. You will be able to, if you sell that property, gain that money back, right? Or capture those gains. But the good thing about real estate is that it also cash flows, right? So you also are able to get some of the gains back while it cash flows.
Yeah.
Another good thing about real estate, one of my favorite things about real estate, is that you have what I like to call like a phantom expense. So the government wants to incentivize you to buy real estate. And one of the ways that they incentivize you is that they create a way to depreciate that building. So every single year, you'll have an expense called depreciation, okay? And it's just on paper. So let's suppose that you create $10,000 in cash flow, just to, say a number, right? It could be very easily that the depreciation is $18,000, okay? So you will receive that $10,000, but on reference to paying taxes, you actually received an $8,000 loss. Does that make sense?
Yeah, I'm with you.
So that is where, these tax shelters are created, and that is where real estate really is able to increase your returns drastically. So for example, for this particular one, and remember we have 2 buildings there. So one of them was actually a 7-unit building, okay? And that 7-unit building is the one that we recently refinanced. So in this case, the person was able to receive about 10% return just through the cash flow, okay? But then once we refinanced, we were able to capture the gains of the appreciation, and the overall return was about a 17% return.
Wow.
Okay, in a 4-year period of time.
Do you have full discretion to say when to refinance and when to sell or not to sell?
Yeah. So obviously we're going to, communicate with the investors.
Right.
But the good side of being a passive investor is that you are able to pool your money with other investors, right? You're able to get into bigger properties or into bigger deals that maybe you couldn't get yourself into. You're also finding deals that are probably you would never find, right? So we typically tend to, none of these buildings that we have bought have been, you know, sold to the public or shown to the public. We are in direct communication with sellers, so they're called like these off-market deals. So these deals are not even given to the public, and so you're able to get into these off-market deals. But the downside is you don't have that much control, right? So that's why you're relying on someone like myself, which is called the sponsor of the deal, to actually navigate you and that property to be able to renovate it, refinance it at the right times, or sell it at the right times. And at the end of the day, though, we do communicate with the investors. We do ask for full control of that property.
Gotcha. No, I'm curious. And so a lot of investors, I feel, if you're saying, hey, I can get you a 17% return, they're going to give you control. And once you've done that a couple times, you've built a good following.
This one was a good example, right?
Yeah.
Not all of the deals are going
Yeah.
to be that juicy.
Yeah.
But it was, I think we had actually recently met during that time period, and it was right before Little Havana took off is when we were able to buy that property. So it was really, really good. So the appreciation that we saw was incredible, and we were very fortunate for that. But we did a lot of work to the property as well. There was a lot of sweat equity that went in there. And what we were able to do is literally increase the rents by 50%,
Wow.
So no more than 50%, because some of the properties, some of the units were renting out at $600 when we got there. And today they're renting out at $1,200,
That's awesome.
So we double the rents there.
That's awesome. So, two questions that I thought. So are you still looking for investors, and what, or maybe not even you personally, but what do you recommend, for somebody? And is there kind of a threshold? Hey, I think you need to have this, you need to do this, just to kind of give some, useful advice. Someone who hears this and they're like, man, I need to get involved some way.
Yeah, I would say definitely if you're going to just be a passive investor, which I could get more information for that. We didn't even know that this conversation was going to go this way.
Yeah.
I would say definitely vet the person that you're going to be giving your money to.
Sure.
And don't give them, if you're planning to invest a certain amount, don't give them all of that money at once, right? First of all, vet that person, make sure that that person has the experience, the knowledge, and the expertise to be able to navigate that property, to be able to give the returns that they're actually claiming that they're going to be able to give, And you got to make sure what are all the fees that person is going to be charging you, because there are some fees, but obviously there's some normal fees and customary fees, and then there's always these people that are charging.
You're smiling because you must have seen some bad stuff in the past.
Yeah. I've seen crazy things out there. We've had investors come to us with some crazy stories and some crazy experiences. So we've heard it all. And obviously, there are some shady characters out there, unfortunately, and they look very good. But at the end of the day, it could be fraudulent activity that goes on. But definitely make sure that all the fees are disclosed, everyone is being upfront with you. And what I always say, or I like to think is, who cares how much the person is charging if they're able to get your return, right? And then you always want to be able to compare that return to what you're currently doing or another option that you might have, right? So most of our investors, they're investing in the stock market. They're not happy with the returns. They've been doing it for X amount of years, usually like over 10 years, and they just don't see that return coming in year over year. So they're interested in some other type of avenue to be able to invest. And so I always like to go side by side with what they're currently doing, and then with the potential that we're able to create, and then obviously show them what we've been able to do in the past with other investors. But again, if you have a certain amount of money, don't invest it all. And I would be the first to tell that person, even if they're going to give me, an X amount of money, I say, look, I don't want your whole nest egg, right? let's make sure that this project works. And then little by little, you start giving more and more money.
So how much of your time is now looking for investors? Is that a large part of your business now?
Well, we don't look for investors. They come to us.
Okay.
So we have a brokerage, like I explained before. And so just by our brokerage and our consulting firm, just by doing that, we end up getting investors. They're usually past clients.
Yeah.
You know, they're happy with what we did. And then we explain to them, hey, we happen to find this deal. Are you interested? And then obviously, you know, people are always interested in making money.
Yeah. Shoot, man, I got a lot of questions. I know we're running up our time. Let me ask you this, though. This is probably another one you get all the time, and it's frustrating to answer, but I'll ask it anyways. So where are you liking right now in Miami, if you like Miami at all, to invest? Where do you know, or Broward, you know, Tri-Counties, what do you like or dislike right now?
Right. So I love Miami. I was born and raised here. I think it's a wonderful city. Now, unfortunately, a lot of other people are finding out that this is the greatest city in the world, right?
I agree.
So what's happening is, you know, we do have a lot of people, foreigners, and like I was saying before, a lot of people from other parts of the country that are loving Miami as well. And that is creating less and less supply and more demand. And just anyone that knows basic economics, when those two things collide, prices go up, right? And the returns are less and less. What I am seeing is that, and this is why it's extremely important. So like another thing about us, I said CCIM, most people don't even know what that is, but I'm a certified commercial investment member, okay? So we've done a lot of courses, and we had to complete a rigorous background check and complete rigorous courses, and they tested us at the end. But also we had to create a portfolio worth of $10 million, right? So both my wife and I went through this rigorous, what we call the challenge, right? And we were able to complete that, and we've got, you know, this little pin here, which is nice. CCIM pin, okay? So why am I saying that? Because it's extremely important to understand the numbers. All right. And so what I'm seeing now is that there's a lot of people buying real estate, especially commercial real estate, and they don't understand the numbers. So whatever the pro forma that they're giving you, or that they're showing to the public, right? And their little flyers, or like a marketing, or, you know, some type of pamphlet.
Don't trust
it. You know, it's what some people that are making it don't even understand it as well, you know? So it's pretty crazy what I've seen out there. But the point is, you have to understand how to interpret those numbers, and all these things can always change. So the current seller is paying for taxes and insurance is not, I repeat, is not going to be the same that you today buying that property are going to incur, right? So those costs are not going to be the same. Sometimes they also forget to mention their management costs, you know, some repair costs that go along with it. So once you really get to know these type of properties, you're able to put those numbers as well into your pro forma sheets and be able to say, okay, so this person is saying that I could get a 5 or 6% return, but my numbers are really showing me that I'm only going to be able to get a 4% return. You still want to buy with a 4% return, that's fine, but at least you know what you're going into, right? What I'm seeing right now is that people are buying without understanding those things, expecting a 6, 7, 8% return, and then 2 years from now, crying that they're only getting a 3% return, right? So that's extremely, extremely important. And unfortunately, right now in Miami and in Little Havana, I'm not able to find those deals that I was able to find before. Like, there is literally certain properties that just don't make sense to us anymore, right? So that being said, we're in the process of looking at other cities in Florida and even outside of Florida. And before we love Miami, there's still certain things, you know, there might still be other opportunities that come in Miami, and we're very active here, but we are in the process of looking at other cities. And but before we make any move, we really got to understand those cities, you know. So we would go there, visit, So it's one thing to understand the numbers, and then it's also to actually view it and to understand the neighborhoods as well.
That's awesome, man. I got a lot of questions, but I'll leave it there, man. I think that's awesome. How can I appreciate, how can people find you, get in contact with you, and all that good stuff?
All right. So you could always contact me on my email, which is contactus@trajancre.com. And Trajan is TRAJANCRE.com. And or just go to our website, www.trajancre.com.
Awesome, brother. I appreciate it. I'm sure you got some potential investors out there. I'm probably one of them. And hopefully, man, we'll be grabbing drinks sooner than later. We'll do it again.
Absolutely. Absolutely. Sounds good.
Appreciate
All
it.
right. It was really fun. Thanks.